Let's start from your thoughts on the market. Like I mentioned, it's up 1/3% today, extending the gains we've seen most of this year. As a pension fund manager, how are you reading equities in 2011?
Thank you very much. I think for us, it's only going the way we had expected. Year to date, Russia index has been up by 12%. Thinking back to what happened in the last 3 years when market was down 45% 2008, down 33% 2009, and up 18% 2010. And we are seeing a 12% recovery only in before the end of first quarter. It tells the story. Clearly, we're expecting the market to continue to go up, and that's going to be driven largely by the happenings in the banking sector. Obviously, because of the structural reforms that CBN has been able to do successfully, and also the activities of Asset Management Company of Nigeria. All these are things that we think will lead to strong recovery in the banking sector, and ultimately we are expecting strong corporate earnings results from the banking sector in the first quarter of 2011.
So that will be a further catalyst for the
so
market.
Clearly that's a major catalyst that we're expecting, which we think will impact the market.
Okay, and of course, like I mentioned, you're a pension fund manager, and I think a lot of investors locally definitely look towards the PFAs, like we call them here, to give the market some a boost, particularly in terms of demand. Now, we know that there have been some rule changes with regards to your business. The National Pensions Commission has allowed you to invest in a lot more assets. How is that impacting how you're investing going forward in 2011?
Yeah, in terms of investment in equities, we're not likely to see major changes. We are limited to just exposure of 25% of our assets under management, and that has not changed. So, but within the 25%, we are likely to see more activities. Actually, we are likely to be more overweight on the banking stocks, and also maybe stocks that are exposed to infrastructural spending, because we understand federal government is going to be spending about 1 trillion this year on infrastructure.
Right.
And also, we're looking to be exposed to food and beverages stocks, primarily because we believe as GDP goes up, which is likely to, we have a forecast of 7% this year. As GDP goes up and the global commodity prices go up as well, we're likely to see increase in spending from the middle class. So we're looking at exposure to some key subsectors, mainly banking, infrastructure, which is represented by building and construction, and also food and beverages.
What about for the fixed income side of things? We have heard, of course, that there might be some changes with regards to the type of assets that will be available for you to invest in that space. How are you investing in fixed income this year?
I'll tell you, our key concern in fixed income market has to do with inflation. Because if you look at what's happening in the marketplace right now, you see that the yields in money market are sub 10%. The yield that we see on the bond market side, the 3-year tenured bond is presently at 10% as well, while the 5-year bond is presently at 11%. Meanwhile, inflation is reported to be at 12.8%. That's a major concern for us as investors. So clearly, we're going to be watching the market, and we expect CBN to do a lot in this regard. CBN continues to adjust for tightening the monetary policies in this regard. We expect there to be correction in this particular...
So generally you expect yields to go up?
Oh yes. It will be gradual. It may not happen immediately, but we expect yields to go up in the money market. And then we expect to see that correction also happen in the bond market. So we are not going to see significant exposure in the immediate term. I think all eyes are on equities at the moment. But as time goes on, you are going to see exposures to those as well.
What about alternative investments? How have the rule changes opened new frontiers, so if I can use the word for you?
I was going to talk about that. Now we are allowed to also invest in private equities. Hitherto that wasn't allowed. Now 5% of pension funds could be exposed to private equity funds, and another 20% could be exposed to infrastructural bonds as well. So these are very interesting things that are happening in the marketplace, and we are expecting to see products, of course, that will meet our requirements and then the PENCOM requirements as well, for us to be able to be exposed to these instruments.
So overall, a very exciting year.
Oh yes, you can say that again.
Anyway, we look forward to it.